But let's welcome on board Samir Dalal and ask him about how this script is going to play out. Samir, hi, good morning. Volatility once again. Samir, what is the message for the investors?
Yeah, good morning, and thank you for inviting me to the show. So you're right, volatility is going to persist and it's going to persist for a little longer. We have to hope that the taco trade plays out, that is Trump will chicken out and end this quickly. But having said that, look, if commodity prices, oil in particular, remains at these higher levels, the positives that were coming to the Indian economy, which we discussed, I think, last week, again suddenly start disappearing. So, in this kind of situation, it becomes tricky and dicey to determine where the market is going to go. It's easier for us then to play stock specific count and sector specific because there are certain sectors that will do well even if oil remains high or it moves down, because at the end of the day, this is something that is being done to substitute the requirement of energy in India. So, the renewable energy side, some focus on that. We still believe auto will not get affected whether oil moves up significantly or stays where it is. Demand for auto industry will continue. Banking and financial services focus more on the India specific, which are not as badly impacted. That might be a better way to play the market or invest in the market rather than trying to focus on the Nifty and seeing where the broader indices are going.
Samir, do you go out and start buying at least bottom up? And if so, does the tilt be towards some of the oil sensitives as a tactical trade? Do metals come back in favor as a tactical trade maybe over the next 2 to 3 months, given the kind of the kind of commentary that we're seeing and possible escalation in West Asia?
See, yes, I would definitely be looking to add on to stocks because I don't think this is going to escalate too much, given that, okay, let's put two things into perspective. One, the US is going in for its midterms very shortly. And I don't think Donald Trump is going to want to go in a situation where he's at war, right? Where oil prices have moved up significantly, where the inflation numbers in the US are showing high, because that doesn't bode well for him. So is he going to, according to me, continue this? I don't think he's going to continue this. So would I be buying into the market? Yes, I think these kind of corrections that happen, these are knee-jerk reactions, which are it's more of the fastest finger first, the high frequency traders who are getting active and jumping the gun right away. If you noticed yesterday, the long onlys really haven't sold too much into the market. In fact, FIIs and DIs both were net buyers in the market yesterday. So for me, as a long-term investor, yes, go ahead, buy. I think there are opportunities. This view is based on what my assumption is as of today. Now, if oil spikes up and, Hormuz gets shut again, prices run up to 140, 130, then obviously those bets get called off. But that is, we're trying to predict something that we don't have an answer to. So for me, given where we stand, yes, it's a buy. There are sector specifics. I told you banking, I told you energy, told you auto. These are sectors that we will look at specifically and stocks within that space and accumulate. And that is our view, and that is what we think most investors should do.
Right. Okay, Samir, Kunal, hang in there. Lots more to talk about, but let's address the newsmakers as well this morning. And Meryl joins in from our research desk with a list of the names.
Yes, these are some stocks that we've seen that we're tracking in trade today. Starting first with SH Kelkar, the company's reported a strong business update. They've reported consolidated revenues rising up nearly 14% on a year-on-year basis, up to 600 crores for the company. Phoenix Mills as well has posted a healthy operating metrics. They've seen retail consumptions higher about 32% on a year-on-year basis, while occupancy in the company's commercial office portfolio has improved up to 72%. In terms of other names, we've got Nalco. The company has signed a joint venture agreement with NLC India. It's going to be developing a captive thermal power plant in the state of Odisha, and this is going to be supporting the company's long-term power requirements. JSW is also continuing to expand aggressively. They've commissioned over 1,080 megawatts of renewable capacity since the month of April, taking their total operating capacity up to a 14.5 gigawatts. Ventive Hospitality is another name in focus today. They are entering the luxury resort segment with a 282 crore acquisition of Kelzai Eco Reserves. Tanfac Industries is another name that is going to be in the spotlight. They have raised up to 423 crores through a mix of QIP as well as a preferential allotment. Now, the funds from these proceeds will be used to expand the company's R32 refrigerant gas business as well as its fluorochemicals business. And we've also seen promoter Anupam Rasayan contribute an additional 135 crore in these proceeds. KP Energy, on the other hand, has commissioned a 50.4 megawatt wind power project in the state of Gujarat, while Jain Resources Recycling has commissioned the second furnace of its copper anode production line in Tamil Nadu. On the negative side, we've got a few stocks as well. Graphite India will be shutting its graphite specialties and coating division in Germany. They've cited weak demand as well as the impact of Russia-Ukraine conflict on their business. So yes, these were some stocks that are going to be on our spotlight today.
Okay, thank you so much for that, Meryl. Let me go across. There's Jude who spoke with HFCL, the optical fiber manufacturer, finds itself right in the middle of an ambitious expansion plan at its Hyderabad unit. Stock has been on a tear as well. I mean, we saw a bit of a correction yesterday, 5%, but from the lows, it's done very well for itself. The company has nearly tripled its optical fiber manufacturing capacity from 14 million fiber kilometers in FY23 to 40 million kilometers FY26. Company's managing director Mahendra Nahata told ET Now that despite the influx of AI-powered data centers in India, the market is still a long way in terms of growth, and there is plenty to catch up on with regard to data center hyperscalers which reside in North America. So making that comparison, in fact, here's a slice of the conversation. Listening.
Demand at the moment is more from export. I would say more than 70% of our product is being exported. And demand is from data center, the hyperscalers, which are mostly happening in North America at this point of time. India has started putting up data centers, but it will take little time before they come to the maturity level that they start buying fiber optic cables. And of that kind of cables which are being bought by the North American data centers. Right. It will take some time. But yes, India is coming up, and I believe Indian demand will become significant from data center in next couple of years' time. Demand from telcos in India is a bit subdued at this point of time. Right. One reason being that fiber optic cable prices have gone quite high. So telcos are suddenly find it shocking kind of a thing to pay those kind of prices. But demand is also there from BharatNet, where we are also supplying cable, and 30% of our supply is going into India, 70% is export.
Okay, that's the HFCL management speaking with us exclusively. In the meantime, IRB as well has seen a record toll collection, an uptick of about almost 28%. Rabinder is here with more details.
Well, as IRB Infra has reported a June 26 toll revenue of 808 crore, registering a 28% on a yearly basis as compared to 631 crore last year. And however, the collections were down on a 4% on a month-on-month basis from record 843 crore, which was reported in May 2026. And despite the sequential dip, the company highlighted that the June marks another month of healthy performance, which was supported by strong traffic growth and periodic toll traffic revisions. And among the key subsidiaries, IRB MP Expressway has reported a toll revenue of 167 crore as compared to 148 crore, and IRB Ahmedabad Vadodara Super Expressway tollway has recorded a toll revenue of 76 crore. And management said that the record-breaking toll collection reflect the strengths and the resilience of its business, which was driven by the consistent traffic growth and traffic revisions and a strategic expansion strategy. And if we talk about the order books, then the company's order book also continued to strengthen, with the total order book increasing to 44,900 crore in Q4 of FY26 as compared to 32,600 crore in Q2 of FY25. And looking ahead, management remain very confident that they are expecting the combined toll business of IRB and its private InvIT to deliver a 20% cash flow growth and 25% CAGR profit, and Additionally, the company expects construction and OEM revenue to comfortably exceed 3,000 crore in FY27, indicating confidence in the sustained business momentum. So, back of this monthly total revenue for the June month of 2026, IRB Infra can be in focus.
Thanks, Abinda, for that. The other big thing which is happening is the IPO of SBI Funds Management, the India's largest AMC, which is the price between 545 to 574. That gives the company a market value of nearly 1.17 lakh crores or $12.3 billion, and its prices the IPO at roughly around 24 to 25 times FY27 earnings compared to an SGFC AMC which is around 30 times trading currently. Kunal, how do you look at SGFC AMC and Aditya Birla AMC?
So I think these stocks, so for example, I think HDFC AMC is very close towards its lifetime highs. I think 2024 highs for the stock was around 2,900 levels. The recent high for the stock was 2830, 2840. And from there, the stock has cooled off after yesterday's price correction. But relatively, I think from the March lows, from the corrections of 2024, the stock has been quite stable for HDFC AMC. And we've seen that the stock has a higher degree of correlation with respect to the market moves. And whenever the indices stabilize, we've actually seen HDFC AMC to be one of the more prominent stocks which falls in that low beta category, which has a similar movement with respect to the benchmark indices. But then when we look at the other peers, look at Aditya Birla Sun Life AMC, look at Nippon Asset Management, I think these stocks have done phenomenally well. So they have not just surpassed the 2024 highs, but I think they're up from those levels by almost 20-25% from those levels at the current juncture. So the price movements for the AMC basket as such overall, I think has been very strong. ICICI AMC, the one which was recently listed, that stock recently I think corrected from 3,500 towards 3,150 mark. But I sense that many of these AMC stocks are the ones which is forming a stable pocket for investors and for medium-term positional traders.
Right. Samir, would this IPO interest you at all?
Absolutely. So I think mutual fund industry is something that is going to do really well over the long term in India. Look, the SIP flows is just the beginning. I mean, if you see it's doing really well, but the numbers are still really small. I'm not saying it's all going to happen right away. It's going to take time as the industry keeps developing and becomes bigger. But the SIP, which on average is working out, I think, to 3,000 rupees per person on average, can easily scale up to 6,000-7,000 over the next few years, right? So just imagine the kind of inflow of money that happens. And the operating leverages for these businesses, fantastic. Because there's no additional cost really required to set up. Now, for every additional rupee that we manage, we earn, even if we earn a 0.4 basis points, which is what most of these companies is earning, that leads to huge amount of profitability going into the company. So not only do you get growth from inflows, but if the markets continue to do well over a longer term period and these funds can deliver a return of 10 to 12% also, you get the natural 10 to 12% increase in the AUM plus the additional flows that happen. Now, am I saying this is going to be a one-way directional way up? No. Look, this business, like all businesses, cyclical in nature. So if the markets turn south, and for the time being, fund flows stop, you see a reduction in the AUMs, panic hits the street and you start seeing the stock falling, those would be the apt times to buy. SBI Mutual Fund actually is coming in at a very good price, leaving a lot on the table for the investor, if you ask me. All the other counters are trading at much higher valuations. In fact, SBI was trading at 800 plus in the gray market, I mean, unlisted market. So you're getting it at under 600. For me, it's an all-out buy. I would definitely be looking to invest in this. And they are the largest player in the industry. So it does get more operational leverage and benefits.
Okay, that makes sense. And that's an interesting take. But Tata Steel, that's the other one in focus on the back of its Q1 updates. Let me take it across to Ashesha and get in the details.
Well, yes, mixed set of operational update is what Tata Steel has reported for the first quarter of FY27. And remember, most of the factors were already known, so no major surprises as such. First up, let's talk about India operations, where production has declined by about 7% on a sequential basis. Remember, many of these seasonal factors like monsoon also continue to remain at play for companies like Tata Steel. On a year-on-year basis, India production has seen an increase of about 10%. Now, this, remember, is on account of higher output at Jamshedpur plant and also on account of increased capacity at Kalinganagar facility. As far as sales volumes are concerned, they have declined by about 19% on a sequential basis, but they have risen by 8% on a year-on-year basis. Domestic deliveries itself grew by about 11% YOY, and that is what aided growth for India deliveries this time around on a year-on-year basis. Meanwhile, let's also talk about UK and Netherlands operations then. As far as Netherlands is concerned, production volumes declined 5% sequentially, and they saw a decline of about 10% on a year-on-year basis. And this impact was on account of shutdown of direct sheet plant in April 2026, but this was largely known, so no major negative surprises over here. Now, as far as UK is concerned, we did see some negative impact over here as well, but the company says that the transition for electric arc furnace continues to remain on track. So that is one positive commentary that has come in from Tata Steel. As I mentioned, monsoon and other factors continue to remain at play, not only in the first quarter, because the last part of first quarter is impacted by monsoon, but we will see that impact playing out in the second quarter of FY27 as well. So largely mixed set of operational update is what Tata Steel has reported for the first quarter of FY27.
Thanks, Asisha, for that update. Samir, the PV makers, Tata Motors had an annual meeting there, and they've given an ambitious target for the PV segment. How do you look at the PV makers?
I think it's a great story for India, right? I've been saying this for a while. Today, India sells about 4 lakh cars a month. I think in China, they're selling 16 lakh cars a month, right? So what is the opportunity that we have? Can we scale that from 4 lakhs to maybe 6 lakhs, 8 lakhs? Can easily happen. Now, who are the domestic players who have a large share of the market? Maruti obviously has the largest share, followed by Mahindra and Tata, which have now become very large players. In fact, have outdone Hyundai and Honda and Toyota and all these other players. Not only the cars, we are talking of the combustion engine, but I think the lead start that Tata Motors and Mahindra have got in the electric vehicle space, I think that is going to be something that will benefit these companies in the PV space over the next many years. Look, we got the first signs that with the Delhi government coming out and saying we are not going to register two-wheelers and three-wheelers which are petrol after a particular point, which is 27 and 28 respectively. I think these kind of statements will keep happening through different states, and as that keeps happening, the shift towards electric will keep progressing, not only from two-wheelers but also to four-wheelers, and this will drive a great momentum for these two companies which I mentioned, Tata Motors and Mahindra. Maruti will obviously come into the race for it, and they have the capacity, they have all of that in place, but they have fallen back a little bit, so they will take a little bit of time to catch up while these two guys will keep getting market share. The problem with Tata Motors PV, unfortunately, is they don't control the big part of the profits of P&L of the entire unit, right? Jaguar Land Rover controls the lion's share of the profit loss statement. And there they've gone through a lot of difficulty last year with two factors. One was the cybersecurity attack, the second being the war that happened because of its sales in the Middle East and Chinese and US markets. Then, of course, the trade wars in the US all affected. Now, I think a lot of that pain point is behind. The company has guided for a net cash zero this year and cash positive surpluses going forward. We think with JLR turning profitable this year and the India PV operations doing well, I think that is one of the dark horses to watch out for, and I think that stock has a huge upside potential. Disclaimer, we are invested. We've been recommending this stock to all of our clients and investors, and this is one of the stocks that we think will be one of the outperformers over the next 2 years.
Which stock did you say, Samir?
Tata Motors PV.
Tata Motors, right. In fact, Tata Motors PV has also outlined its growth roadmap as of yesterday along the sidelines of its AGM. Let's hear it out from N. Chandrasekaran as well, the chairman at the Tata Group, who says that the company is now targeting a 20% market share from the current 14%, also saying that they're planning to launch 6 new models along with multiple product refreshes.
The Tata Motors passenger vehicles company, including JLR, will target a sales of $60 billion and that is in FI 3031, with the JLR contributing about $45 to $50 billion and Tata Motors domestic business contributing about $15 billion. And then the combined profit will be in excess of 8 billion, in excess of 5 billion. And the CV business, which I explained separately, has a target of 40 billion that I explained in the CV meeting. And together, the automotive business will be, between the two companies will be $100 billion. In terms of capex, Tata Motors domestic business for the next 5 years has a capex target of 40,000 crores, and JLR approximately has a target of 20 billion pounds for the next 5 years. About the market share, the Tata Motors passenger cars currently at 14.2%. Our 5-year target is to cross 20% market share. And the way to do that is to produce good cars, and also we have 6 new models. We call them white spaces to address segments which we don't address today. Also, a lot of refresh will happen of the existing models.
Welcome back, and of course, there's plenty to speak about. I want to quickly take your views, Samir, with regard to with regard to the financials and how you're playing that back. I know that you like bottom-up stories, and within financials, you have a few stories from the NBFC pack which you're keeping your eye out on. Will you use this dip to probably deploy in some of those names, and what would those names be, if you can give us a sense?
So Harsh, we've already deployed quite a bit in that space, and we are actually overweight on the financial sector. We've been overweight for some time. The sector has actually, some NBFCs have performed really well, like L&T Finance and AB Capital, which have run up quite a bit. But there's still a lot of them that need to do a bit of catch up. So the other two that we do like, one of them is, of course, Samman, as you're well aware. The stock's doing okay right now. The other is M&M Financials, which has not done as well if compared to the rest of the pack. Then, of course, you have your Bajaj Finances there. Everybody owns them, but that's just standard operating. But I'm talking of something offbeat. So those are the two that we think will do well. In the banking space, also, we remain very constructive. If you look at the kind of growth that we have seen in loan books, anywhere between 15 to 18, 19%, some going about 20 as well. It gives you kind of a positive view that the things are starting to turn around. Investment capex is beginning to happen, and as that keeps progressing, banks will keep doing well, NBFCs will keep doing well. Consumerism, we believe, will start coming back nicely. So we are quite positive that the profitability for these entities will grow, not only because of margin expansion, but because of growth in book. And we also believe that, given the fact that oil had run up, inflation was a big worry. If that does not pan out and oil stays between the 65 to 80, 75, actually we prefer, then you could actually see maybe the risk of interest rate hike going away, and that could be something that spurs and gives momentum and sees the banking and NBFC stocks starting the rally.
Samir, how do you look at the some of the technical factors for the market? Yesterday, we saw the kind of crack that happened. You had stop loss triggers which were there, and that too in stocks where the margin trade book was much higher. How do you look at, from a technical point of view, how the market is placed at this point in time?
These technical knee-jerk reactions that we talk of based on news, like I told you earlier also when I was talking, is mostly your high-frequency traders and fastest finger first, people who want to react right away. So they've gone ahead, maybe shorted the market or sold some stock off or whatever. Then also what happens is you get a lot of stop losses getting triggered because there are a lot of active traders in the market who work on stop losses. So the minute the market cracked below the 24,200 or maybe 100 levels where the technical levels sit, a lot of selling came in. But if tomorrow Iran and USA come out with a statement that no, everything is normal, the market gives a rally up, we'll stop discussing what these technical factors are and all of these things are. So I don't think we should play too much focus on that at this point of time when you're a long-term investor. Look at it as an opportunity. Now, if things get worse, maybe you will have to bear pain for a bit longer. But our assumption is that, look, we've gone through this war from February all the way till maybe June. The markets didn't crack too far below 23,000, and I don't see that happening now. So can the market go down another 3-4%? Yeah, it can happen, but am I going to sell out because of that 3-4%? No, I'm not. I still think that the next 2 years are going to be great for the Indian market. A lot of the pessimism is getting factored in. Simply, I'll give you an example of what I mean is today, IT stocks, everyone is negative. The stocks are down. Everyone is downgrading them after the stocks are down 30, 40, 50%. Where were these broking houses, big broking houses before when TCS was giving a buyback at 4,500, not coming out and saying, oh, look, the valuations look expensive. Now they come out and say that US is trading cheaper, so we should correct. So the similar kind of thing will happen in this. You get these sell-offs, technical sell-offs, and then suddenly things will change and you'll get these technical bounces, and then we'll be focusing on other things. So as a fundamental guy, I look at it in a different way. 3% is not going to change my life. I'm not smart enough to catch the exact bottom of the market, but this is the time to keep investing in.
Point taken, Samir. It was a pleasure talking to you today. Thank you very much for joining us.